Welcome to the DeFinity Market Strategy. I'm Paul Rodriguez, and I'm here with Manu Choudhary, who's the CEO of DMA Link and the co-founder of DeFinity. Welcome, Manu.
Hey Paul, how you doing?
I'm doing very well, thank you. How's it going at your perspective?
Yeah, not too bad, not too bad. I'm going to talk about Gary Gensler again, because I clearly have an unhealthy obsession with this man. But essentially, this week in Gary's diary, he's been essentially testifying before the European Commission about his view on crypto, and most interestingly, his view on the need for regulating the entire market. Now, how funny, a regulator asking for more regulation? That's very shocking. But again, he's taken a bit of a swipe at DeFi. He's basically raised concerns about the fact that there needs to be way more intermediation, i.e., more centralization of decentralized finance, which is a very interesting angle. But
That's
again,
completely the opposite of what it's about, isn't it?
it is. But his view is very interesting. That in the interest of protecting the investor community he keeps referring to, because again, he seems to think every single crypto is actually a security, which not every single one is. That's not entirely true. But his view is the only way to control it is to have some kind of central authority that regulates it. Now, in order to do that, you need to have centralization within the process. So this is again him taking his spiel to the European Union, who obviously were very interested in his thoughts. I wish Gary would not Zoom conference with anyone outside the United States, to be honest. I think, let's see what happens with the US. Which brings me on to the second thing from a reg perspective, the infrastructure bill, which I mentioned, I think, in the first conversation that we had. This is basically an interesting bill about building roads and bridges, and also taxing crypto to pay for it, which is interesting. So one of the interesting things they put inside the infrastructure bill is a very vague term that refers to brokers. And they haven't really defined what a broker is, but a broker could be absolutely anything. So what it means is that in order for you to transact basically any digital asset, if this goes through, and I think unfortunately it probably will be passed at the end of this month, it means that it makes it much more difficult. There's a whole bunch of KYC and IDMV hoops to jump through in order to do transactions with right now are essentially completely out of scope. So what is this going to do for the crypto market come late September? I don't think anything good is going to come of it. And then also, I think we mentioned this in the second show that we did. The SEC looks as though it probably will begin to approve ETFs in crypto based on CME futures. And again, if you look at what happened in December 2017, the second that the CME started trading futures, marked an interim top. Well, not an interim top, an absolute top in that cycle,
Yes,
but it's likely to mark an interim top in this cycle. So that's the news in the cryptoverse. There's slightly negative. On the more positive side, what's really interesting is earlier this week, so on Monday, Cuba announced that the central bank was going to essentially allow its citizens to transact in Bitcoin. Here's a newsflash: they've been doing it since 2017, whether the central bank wanted. So I'm glad they've given them their consent, but quite frankly, it's happening anyway. But but I think what's interesting about this was the wording of the press release was that essentially they would allow transactions that were for the benefit of, or for socioeconomic purposes. I'm not sure what that means, so this is slightly farther removed from El Salvador, who a couple of weeks ago made Bitcoin legal tender, which was a huge deal. And what it basically meant was, if I'm a business, I have to have Bitcoin on my balance sheet because I need to accept and make payments in Bitcoin should someone want to do so, which is remarkable. So they had to go to market, buy a couple of $100 million worth of Bitcoin to try and kick off this process. Is Cuba going to do the same thing? I've got a funny feeling they will. However, obviously, because of the nature of Cuba and because of the relationships they have with the United States, this might actually be negative, I think, in the short term, depending on what the languages they use. So at the moment, it's just an announcement. They've got no details as to how this is going to work. But it's certainly, I think it's positive, and it means that you're seeing more countries, because they would be the second nation to embrace crypto, much to the angst caused by the World Bank and the IMF, who've been to visit El Salvador several times.
really, that's so interesting. And also, just coming right up today, we've got just on the data, we've got non-farm payrolls. So usually there isn't much of a surprise, or even if there is, the markets don't move a lot. But I think this is the first one that's going to be from when traders and investors and fund managers are coming back from their holidays. So there should be a bit more volume coming back in. Holiday period is over. So we can't really discount a big move in the markets given that we're all trying to, or the rest of the market is trying to look for clues as to the direction of long-term bond yields. So bond yields go up, then it's going to be a drag on virtually every asset. But as long as they don't raise interest rates, the market seems to be quite happy. And whichever way you look at it, that this will have a big impact on the rest of the market. But I see the challenges that you're talking about coming forward. They're definitely things that we've got to bear in mind. Now, what is going on with the Bitcoin chart? We should start with actually what I'm going to start with is Ethereum, because this is something we were looking at last week, and we had a potential double top. I was looking at this in the context of a correction, expecting it to come back down. My outlook for this was a top. This is usually a very reliable top, which is why I was holding out for this to create what we call a head and shoulders pattern. Support held, it didn't trigger it, but we were letting this rally run because it could have easily turned back down and broken this level. Now, last week we were zooming in on the short term because, of course, this has been pretty strong and it's continued to push higher. And this was our trigger level for going bearish, which was 29.51. But above that, the market had upside potential. Now you can see that it's broken through this resistance point and it's gone up in a straight line. And in the weekly, I've said, look, if it's going to go up so fast, so quickly through these levels, it's got to try and take out this high. It's at least going to have an attempt on it. So what's going on with Bitcoin? Bitcoin, the rate of incline, if we take a step back and look at this rally here, you can see the rate of incline is not quite as fast. In fact, the highs are starting to turn over slightly. But if we're using Ethereum as the leader and Bitcoin as the lagger, I wouldn't be surprised now to see this take out the previous high of this week, which would be basically a push through. What have we got here? 50,608. That should trigger some stops. And then the next level would be 53,500 to 5,400. Now, it can still go up there. This could still be part of a massive top. I've seen this happen before where you've got what's a head and shoulders pattern goes into a double top, and then you get an almighty correction. So in other words, the correction could be coming bigger. But we have to bear in mind that this could also just take the high out and keep going. And so I think it's worthwhile from a short-term perspective to be looking at a squeeze to the upside and go with it until proven otherwise. Now, I think it's like any fragmented bull market, you've got to be careful what you choose because some of the other markets are actually trading much better than this particular one. So I'll look at, like, for example, let's jump into Solana. This has been going great guns. I mean, it's been a virtual straight line upward move, and this is not a trend that you fight. So I've shown this in terms of what's called Elliott wave theory, only because I like to keep it very simple, and this is a very simple model. In Elliott wave theory, if you haven't heard of that, don't worry. It basically means the market moves upwards in 5 waves. So there's wave 1 and then a corrective wave 2, wave 3, then a corrective wave 4, and then the final wave 5 before a larger correction. In simple terms, this is just going up at a very accelerated rate, and it may be in the last phase of this cycle, but that doesn't mean that the upside wouldn't be considerable. So it's worth keeping an eye on that. And also, why is this going up and why are other coins going up and Bitcoin not going up? This sort of leans the picture more to the bullish side. So I would say, as trading goes, I would look to trade the strongest markets, and if Bitcoin catches up, then all well and good. But I'm still slightly concerned about Bitcoin, but I think it's better just to trade the ones that are looking good and sort of avoid the laggards. Now, if you look at the Bitcoin Ethereum chart, Ethereum, whether it was going up or down, has always outperformed. So on a spread basis, it's always paid to buy Bitcoin, sell Bitcoin and buy Ethereum on a spread. But that I would also be careful about that, because if Bitcoin breaks its high just over 50,000, that could snap back. So there will be a correction that will wax and wane, but it's a good thing to keep an eye on, and I'm going to include it in the charts for next week. So elsewhere, just looking at the equity markets, because it's really important to do that for a broader correction. S&P still in a broad upward trend. It hasn't really reversed, but we talked about the VIX. So I want to go back in and zoom into what's going on the VIX. The VIX, these higher lows are very interesting as far as I can see. You see the lower lows that the market was making as the S&P was moving higher. These higher lows are not in line with the market making new highs. We call that divergence. So there's divergence between the S&P and the VIX. Now, obviously, the signal has to be that that the S&P goes down. That's what we're trading. We're not trading the VIX. We're trading the S&P, or the participants are generally trading the S&P. So we need the S&P to show a reversal signal of some kind, but this is showing that there is some hedging going on, and it's making me a little more nervous about whether we're close to a high, because I think we're either there or we're very close to a high, and it's like we're squeezing the last bit of the toothpaste out of the tube, as it were. So I think we need to be careful that there might be a fairly decent correction before this market continues back upwards. And we're seeing some relatively short-term consolidation in the Nasdaq, nothing to really write home about, but it's not outperforming. The Russell 2000's had a decent rally. It's had a really good rally, to be fair, but it's still within a range. So that's not really giving us any broader picture other than that it's lagging. So this is why I'm focusing on the non-farms and maybe some other fundamental signals that could trigger a sea change in market sentiment. And we should also look at the bond markets, because US 10-year yields, now they've been in a range and potentially pushing to the upside. Now, if this happens, then we will see a correction in equities. Some of the coins might be immune to that, but I'm not sure if all of them would be, which is, again, why I'm slightly cautious on Bitcoin rather than the others. But this is where we get the clarity. When if it breaks this trend line, then we're going to go all the way down to like 0.5. So there'll be a really big move. But if it accelerates up, we could be over 2. So I know we're at a bit of a crossroads, but this is going to be an important crossroads that determines where the market goes literally into next year and possibly even beyond. So as soon as this resolves, we will put it in the weekly, and it will give us a good steer as to where the rest of the markets are going to go. So that's pretty much what I'm looking at. I included in our weekly Cardarno because, again, I was looking at a reversal pattern there, and the market actually rallied much further than I expected, and it's taken out the previous high, and it's also still looking bullish. So I can't fight that. You've got to go with it. This is a continuation pattern. This very short pattern here is a continuation pattern, and it's using the prior support of the high as a buying point. So as long as it stays above this trend line, which is coming in around 2.45 or thereabouts, which is also twinned with the previous high, that should really squeeze up much higher. So all these other coins that are looking bullish, as I say, lean the picture towards a much broader bullish scenario than I expected. Of course, these can fail at any point too. They could, the sentiment can turn extremely quickly, and everything that we're looking at here is based on probability. So things change, which is why we update, every day and literally every week in terms of the analysis. But at the moment, these other coins are looking very interesting. Are there any that you have got in mind, Manu? Anything that you want to look at?
So I guess all I'd say is that I think the reason you're seeing ETH outperform Bitcoin, and you're seeing things like Sol and ADA outperform essentially Ethereum is basically, if you look at the transaction rate. So Ethereum, whilst it's still proof of work, it's about 30 transactions per second. Cardano is about 1,000. Sol is about 50,000. but I've got to caveat that number slightly, because when I say Cardano is 1,000, that's the base layer. With the Hydra layer 2, that could probably be maybe 50 to 100,000. But again, we have to wait and see how that works. But Sol is great, really interesting tech, and they got around one of the biggest issues you have within blockchain, which is time. So timestamps are obviously very integral to essentially reconciling the blockchain and adding new blocks to it. What Sol did was they used a range of time so they could essentially do things more quickly, which is, again, as far as I'm aware, that's quite a novel solution. Does that have any impact on security? Potentially, but it does make it a hell of a lot faster. Also, when they talk about transactions per second, the only other thing to caveat with that is that 50,000 smart contract transactions per second, or is that 50,000 transactions including confirmations that the funds have been sent to wallets and what have you? So these are two slightly different things. It's not clear. Funnily enough, they didn't disclose the detail, but again, irrespective, I'm big fan of Cardano, as I'm sure I've mentioned many times, and Sol is pretty awesome as well.
Excellent stuff. Well, look, just remember, if there's any markets that you want to look at, please just drop them in the comments and we will cover them for you. And until next week, thanks for watching and goodbye. Thanks, Manu.
Thanks, Will. Cheers.